All right, I'm told we're live here, so let's go ahead and take a look at the action. Good afternoon. It is Wednesday, the 6th of April, 2011, and the market continues to grind higher. We've had, pretty volatile, choppy uptrend here, but the trend does obviously remain higher, and that's the source of frustration recently over the last couple of weeks since we've touched that 100-day moving average. Frustration, that is, for the bearish people out there. Anyways, the S&P 500 continues to find a little bit of resistance right here at this 133.80-ish area. If we take a look here, we can just see what these highs are. These highs back here were 33.69. That high was 62, and then just recently this week, about 134-ish, and we're just kind of poking up through there, but not making any meaningful progress. We do remain above that rising 5-day moving average. The trend is still obviously higher, and the key in an environment like this, like we did, several months ago, is to just focus on: is the market holding up? Is it acting the way it's supposed to technically? And by that I mean, what do we want to see? We want to see a pattern of higher highs and higher lows. So right now we have this little 133 to 134 level that we're holding in, and if that level breaks, then it looks like 132 and a half, 132.30 should be the next level of support, and then a possible gap fill down to 132. So, a lot of people look for the gaps to get filled. This one wasn't filled completely. This one still hasn't been filled. So I don't think that trading to fill gaps is a good strategy, but they do become viable downside targets if and when the market starts moving back down again. Perhaps we're going to see this market just continue to grind higher. If we look at it on a closing basis, where we are, and I haven't looked at this yet, but today's close of 33.66 was the high close for the week. This high close was 47 cents, so it really looks like let's see, we closed at 34.25 that day. We've only had about 3 or 4 days where the market has closed higher than this in the S&P 500. And of course, the Russell 2000 closed at another new high here today, as it is out to all-time highs, basically. This prior high was $85.20 on an intraday basis back in 2007, and here we are at 85.38 in the Russell 2000. I saw some people, and I knew that it would happen, calling this a double top in the Russell 2000 yesterday. That kind of annoys me because that's not what a double top is. You can't look at it at a level where, first of all, a double top, if you're going to see a double top, you see something like this, a pullback, it comes back to that area, and you would have had this prior uptrend. So you could see that, a lot of times in an uptrend, people mistakenly call every test of a prior high a double top. What a double top is we get a break of a trend line, and then it breaks below this low right here. Well, this low for the Russell 2000 would be basically down at $32, $35 a share. And then what you do is you take the height of the pattern, subtract it from the breakdown point, so this would basically give you a price objective of minus 15. You would take the 50 points. So anyways, the point is it's ridiculous. Let's not waste any more time on that. The trend in the Russell 2000 is higher, and the near-term support is right here at 85. We tested that today. We held. You could say, well, we made a lower high, and maybe that's true, but we remain above a rising 5-day moving average, and until we accompany a lower high with a lower low, we remain in an uptrend. We're innocent till proven guilty. You can draw all kinds of trend lines and Fibonacci's and stochastics and Bollinger Bands and all other kinds of stuff to take a look and try to make sense of it. But the fact is, keep your analysis as simple as possible. What we want to do is focus on price action first and foremost. What I wanted to do was I'll do that in a moment here. But 85 is our first important level. Then if that breaks, well, we would be looking for the market to move down to about 84 and a quarter. It'd be time to get defensive, in other words, below 85. And then the bigger level, obviously, or maybe not obviously, is this $83 level. This $83 level in the Russell 2000 is very similar to where we are in the SPY right now. So if the Russell 2000 is leading us, then perhaps the SPY is going to continue higher from here as well. The NASDAQ has a bigger level of resistance, really up at about 58.5. You could kind of make a case that you could draw a trend line off here and say, here we have what appears to be setting up an inverted head and shoulders pattern, and that we're forming a right shoulder here. I'm not sure that I would really put a lot of weight into a pattern like that, but it's, when you recognize the possibility of a pattern, it's good to to basically recognize it would be the best thing to say. And I didn't get any feedback, but apparently the audio is okay, I'm going to assume as well. Anyways, looking at the NASDAQ, it's been a little bit weaker here, obviously. We are holding this 57 level, but we do have, we had a gap up. The market came down pretty quick today, and we are below a declining 5-day moving average with what appears to be a lower high. So back below 57 and holding below 57 for more than a half hour or so tomorrow, then perhaps we're going to get a deeper correction down towards that 20-day moving average at about 56.5. And if that were to happen, then we would have a much nicer right shoulder actually for this inverted head and shoulders pattern that's potentially setting up here. Again, trade what you see, not so much these possibilities, but be aware of what are the important levels. The important level is if we break below and hold below that 57 for a period of time, that perhaps we're going to start to see a little bit of a transition to the downside. So here's a 10-minute chart of that NASDAQ action. Now, obviously, the surprise this week, for me at least, and I think for a lot of people, was the semiconductors. A couple days ago, it looked like the semiconductors had the possibility of rolling over a little bit further here. We had broken down below, we had gapped up, I forget what day that was, maybe last Friday, or I think it was last Friday. We gapped up last Friday and sold off. We had follow through to the downside on Monday. It was looking kind of like, it was probably headed for a little bit further downside, down towards 33.25. I was thinking maybe down a little bit further into this area, and perhaps even a test of those lows just above 32. However, what we saw happen, of course, was that we had news. And, I said it, and a couple people agreed with me, people whose opinions I respect, actually, and it was good to see the people who retweeted it. I think that the short side of the market is a much more difficult, much more frustrating way to make money. It's over the years, there's no doubt that, for me, the easier money is much easier on the long side than it is the short side. Now, I agree, there's some people that do very well on it, but in particular, when you have a market trending higher like this, I was discussing with Today Trader today some of the stocks that, for instance, Campbell's Soup, CPB, every time it looks like it's about to roll off the edge of a cliff, like it did right here and it did right here, you get these little short squeeze rallies. There's a couple other ones. VCI, this one looked like it was just about to drop off the edge of the cliff right there, and instead we got a squeeze higher in that one. There was a couple other ones. NUVA, NUS, RCL, NUS. Let's see. So NUVA is another one. This one looked like it was maybe getting ready to break down a little bit further in here. But when you look at the shorter term time frame and you see that it's above a 5-day moving average, you don't take that action. And if you do get short, then you want to really adhere to your stops, obviously. NUS was one that that we were subscribers were looking at shorting below this level here. What was the level we're looking at? 28.50. We've been stocking this stock actually for a couple days as a short sale candidate below 28.50. Well, it never got below 28.50, so we didn't short it. And so when you see that happen, was it a bad call? It was just a call. It never set up, so there was no money lost. But you can see the danger in here that these short squeeze rallies occur a lot of times when the stocks are actually looking at their most vulnerable point. And that goes back again to the semiconductors. The semiconductors looked vulnerable. There's no way you could say there was anything bullish looking about this shorter term time frame. Then we had a deal, and Texas Instrument bought out National Semiconductor at a huge premium. This group gapped up, and now they've recovered, and they continue to battle this important level here at prior support and this 50-day moving average near the 35 level. So the semiconductors are still fighting a bigger battle near this 35. A little pullback and then another push higher would really be the better way maybe for this market to go, but they look like they are in motion here. And what you want to do is look for the low risk opportunities within a healthy group. Another group that had a strong day today. The group that I dislike talking about more than any is the financials, because I basically don't like the way the financials trade. So you look at the financials and say, they're important for our economy, they're important for the overall health of the market, and it's good to see them breaking some resistance in the 50-day moving average. And there's obviously some good setups in there. Look at General Electric had a good day today. Bank of America had a good day today, but that's a broken stock. Goldman Sachs had a good day today. I'm not really sure where the leadership is coming from within the financials, because again, I don't follow them very closely. I know a lot of people were talking about Citigroup, and Citigroup is up to a declining 50-day moving average, so really nothing much to get excited about there. In particular, I think with this prior bigger level of support. Incidentally, I was going to make a blog post about this the other day, kind of in reference to Apple as well, because the news on Apple was that they were going to rebalance the NASDAQ, and that Apple was going to go from forget what the numbers were, but it was going to lose a lot of sponsorship apparently from people who are have to be weighted with Apple in their indexes. So the amount, I'm just going to make up numbers here. It might have been 20% of the NASDAQ 100. Instead, it's going to 15%. So all these funds that match the performance had to logically sell. However, since that news came out, well, the stock has actually, and that's not Apple, that's GE. Let me just type it in here. Since that, Apple has actually, it gapped up today, and yesterday we had a gap down, but it's recovered somewhat. It's still kind of neutral. But the point was that, the news is, the obvious news isn't always a low risk trade. And so far in Apple, it's been frustrating for the people trying to short it on that logic, in other words. Now here we are down at the lows of the last 2 days, and we are below declining 5-day moving average. And Apple also has this little pattern of lower highs and perhaps another lower low coming right now. The stock is fighting that 100-day moving average, but a pullback in the case of Apple down again towards this 330 level wouldn't be a bad thing for it. It's really more neutral to turning negative here on the daily time frame. But longer term, on the weekly time frame, we've still got a massive uptrend in Apple. So it's time to maybe just stand aside more than sell it short, I think, except for the most aggressive traders. But back to Citigroup, the point I was trying to make there was, back in January, I remember the big story with Citigroup was that people were saying, hey, now the stock is above $5 a share, and all these mutual funds that are, that have it in their charter that they can't own a stock under $5 a share, they're going to have to buy a ton of this stock, and that's going to really go higher. And then they said, no, see, you need it to close above $5 a share. And it closed above $5 a share 3 days in a row, and all the people that bought on that so-called logical event, and the market doesn't trade on logic always. It trades on emotion. It trades on news. Warren Buffett, one of his quotes is, short term it's a voting machine, that it's going to be emotional, but longer term it's a weighing machine. You're going to get a more reasonable look at things over time. But anyways, though, just be wary of those types of strategies, in other words, that are so obvious that that the stock's going to go higher just because it's above $5 a share, and this new group of buyers is potentially going to come into it. So where else were we? We're going to talk about gold for a moment. Gold broke out, so gold has been kind of neutral in here, holding up, but on the weekly time frame, just a beautiful uptrend. Silver as well. Why don't I have my symbol for silver here? Let's just take a look at SLV. Silver in a massive uptrend, and just continuing higher. So, those trends, set your stops in them, know where you want to be out and take your profits, but they're still in massive uptrends. The dollar continues to be in a downtrend. The euro today had a good day breaking out. In here you can see past some resistance. What was I going to look at? The weekly chart on that, I guess. It's broken this weekly downtrend line here on the euro as well. So, there's a lot of good trends out there to take advantage of still. And the key, as always, is risk management. You can't just blindly buy MCP because it's going to have its rest days. It's going to be, today it's down 5%, but there's clearly no damage done to this trend. REE, still keep an eye on, like I tell subscribers all the time, you just can't take your eyes off of the rare earth stocks. There are stocks that are in play that have a lot of volume and volatility. There's just a tremendous amount of opportunity in all these names. AVL was one that was really going strong last week. Well, it gapped up today and pulled back a little bit. So, these will probably need to settle down for a little bit, but you want to focus on where is the action going? Where is it? Well, let me do this first. Subscriber update, I guess. We got stopped out of this PQ today below 920. It really never did much for us. It's still got a good looking weekly chart. If you have more patience than I do, I would say keep that one on your radar. Cadence Design, we're along this one at 1007, so I think we want to keep our stop where it is right now. UAL was a beautiful short that we got involved in on Monday at a price of 22.82, and yesterday I'd said we needed to cover a part right here down at S2, which was $22.22, and the rest of it down here today as it got this massive volume. So UAL was one of the rare shorts that actually is working in this market. I really don't even like trading the airlines, but there was a lot of bad news on airlines this week with the Southwest and obviously oil prices and that sort of thing. VeriSign was another one. We have a position in here with a stop. They got hit today at 36.55, so we took a small loss in there. Again, it's a tight stop. Weekly chart still looking bullish. Daily still looking bullish. Safeway, we have a position in that we got involved in yesterday, and I would say, since the stock really was kind of neutral, keep the stop where it is. Bristol Myers we're involved in, and Bristol Myers looks like it's going to at least, I think it has the potential to at least test the $28 level. And you look at that weekly chart above 28, it could get pretty interesting. So I'd add Bristol Myers to your list if it's not on there. We were looking for a potential purchase in Form Factor today, FORM. I believe they're somehow related to semiconductors. Anyways, they trade about 600,000 shares a day. Nice little flag forming here with this prior resistance, the stock trying to hold support in there. If you look at the weekly chart, it does have some room to run in here as well. So Form Factor, I'd say keep an eye on this one in particular. We were looking at above this high. Well, we've got a lower high from yesterday, so in a declining 5-day moving average. So it's still a little bit early. It's not quite ready. It kind of reminds me actually of what we were talking about last week, which was MPEL. I was saying, keep an eye on this one. We had these lower highs and lower lows. Well, it gapped up on Friday, and I was writing an article on it Friday and submitted that to SFO magazine. And then, I never got involved in the stock because I didn't want to front run basically an article. But this MPEL is still looking like a good candidate. It's cleared that $8 level and still looks like it has the potential to continue higher. It's pulling back here a little bit to the rising 5-day moving average, so kind of similar to where we were a week ago, where we had these little lower highs and lower lows. I'd say let it settle in and then look for maybe buying some strength above 830 or 835-ish in MPEL. Acme Packet, here's a high flyer that looked like it was kind of settling in and found its footing, but today gapped up and sold off, so that probably needs to settle down a little bit. BDCO, it's just too thin really to trade, 260,000 shares a day on average. CAR was another one that, it's up at multi-year highs, and CAR, it gapped up in here and ran a little bit today. If you're involved in that, I'd say a stop down near about 18 and a dime. What else did we? We were also looking at IDTI today, and this one's, you talk about strong semiconductors. IDTI looks like a stock that has some room to continue to run here. The daily chart looks good. It broke a little bit of resistance in there. So on Twitter this afternoon, I had mentioned some of the solar stocks, and I hadn't been a big fan of the solars when the Japanese nuclear plant, the Fukushima, occurred, because basically I thought that stocks like First Solar, they really still need to heal, and I still think that's the case. And somebody asked me about First Solar, and where was that? Let me just take a look here. And they included a chart, and I would say that so the question was, what do I think about First Solar? And here's my chart of it. To me, it's just too cluttered. There's just too much stuff going on here. It looks like spider webs, or I don't know what it is. And I don't mean to make fun of anyone in particular. The point is that if you just keep your analysis pretty simple, what you see here is, this stock is kind of struggling to regain some momentum after getting hit on it. This was earnings. This was the same time that SunPower reported earnings, SPWRA. SunPower, was in a nice trend. It gapped up on earnings and sold off, and that one's just been grinding higher. So some of the solar stocks that I think look best right now are TSL, for instance. You look at this on a weekly chart, and here's and even the monthly chart. This thing's up near all-time highs. It's really been immune to some of the other weakness that I guess I shouldn't say that, because it had a pretty hard sell-off, but it recovered nicely, and we have a rising 10, 20, and 50-day moving average. You look at this bigger level here. I mean, you could look at this as a big cup and handle. And within that cup and handle, you can see a shoulder, a head, and a shoulder. So the point is, again, you can see patterns within patterns within patterns and all that. But until the price action tells you that you've got a low-risk entry point, those are just something to be mindful of. Shorter term, though, you look at this, and again, what I like to look for is these levels where it gets back above a 5-day moving average, and we have some higher lows, and then we begin to get some momentum. That's where it looks like we are in TSL. I am long some TSL. I'm also long some Yingli, YGE. Yingli on the weekly chart, it still has this bigger level that it needs to clear, probably up near $14 a share. But Yingli, has recovered. It's got that, this pattern of resistance becoming support, a rising 10, 20, 50-day moving average. We've got it back above the 5-day moving average, and this prior support, which had been resistance, we cleared through that. So it might, stumble around in here a little bit, maybe pull back to the 5-day moving average, and then above the highs of last week, I think, in particular, about 1310, that should set it up, I think, pretty easy for a test of the 14-ish area. LDK is another one that, not quite as bullish. We've still got a declining 50-day moving average in there, so I don't like that one as much. There was a question about JASO, and the question there was, let's see, in JASO, here we've got a declining 50-day moving average as well, but they were referencing the 200. So you've got, actually right in here, you've got the 50, the 100, and the 200-day moving average. So I think that JASO just isn't set up quite as good as some of the other ones. So, when you notice strength in a group, you want to go for the ones that look the lowest risk. And actually, the ETF, which I don't like trading this ETF, the, what do they call this, the Claymore Guggenheim Solar, whatever, has that same look, really, as Yingli, as LDK. So that, here's another way if you're interested in not, what was it somebody was talking about? Could you imagine if you were short NSM the other day? Well, how much would you have lost on that short versus if you were short the SMH? You would have lost maybe 2% versus, 60% or something like that. Well, your upside's not going to be as good in TAN as a YGE either, but for that, you get that diversification, you get a lot less risk as well. So it becomes what is most comfortable for you, and where do you view the appropriate amount of risk based on what you believe the reward to be. Downtown trader Joey's also looking at JK Solar, and JK Solar, I would say, Joey, personally, this prior support with resistance at a declining 50-day moving average. Again, the ones that, they run as a group, but you might as well go with the leaders like TSL and STP and Yingli that just, to me, look a little bit better set up. But it's definitely another name to keep an eye on in that solar group. So it was Minkovich who says, I sold out half of my JASO based on a failure at the 200-day moving average, just not moving well. I'd say, yeah, instead of JASO, and probably because I've said not JASO, this one probably does the best. But, either take a couple of them that you like best, like I'm in some TSL and some Yingli, or trade the ETF and, have some comfort in that diversification. I did check, and, earnings aren't due on these guys for the most part until, when was it? Let's see. Okay, so earnings aren't due really till, we've got First Solar, looks like April 27th, and then, kind of spread out in there as far as the earnings dates go on the solar play. So it doesn't look like it's an issue for a little while, in other words. Where else was I looking at here? Where'd my Twitter go? What time is it? 2:26. Thank you, Chart Diva. What about? What do you think about SLW, SRA? I'm just going to take a look at SLW. And SLW, it's in a great uptrend. We have these higher lows. You look at this as a cup and handle. It kind of broke that today. And now that I'm clicking like this, it reminds me. Actually, I have it here. I don't think it's the right one, but I was told to get a quieter mouse, and I'm too lazy to plug it in so far. But I'll do that soon, and then we won't hear all these clicking noises when I go like this and draw my line. But SLW is in a real nice uptrend here. It's innocent until proven guilty. I would say, it gapped up and sold off today. Be aware of where you want to keep your stop. I would say maybe this little resistance from a couple days ago in that 5-day moving average, maybe 44.5-ish is where you keep your stop. But it's in an uptrend. It's innocent until proven guilty. It looks good. What do I think about panel after today's reversal? Let's take a look at PANL. I mean, this has been a huge trend. It came, that 50-day moving average and just rallied from 40 to 60. So it's up 50% here in the last 3 weeks. I think it's due for a rest. I don't think it's, these generally, you get a lot of people saying, hey, that's the end, that's the top. These trends don't die very easy. It probably just needs some time to kind of settle in and digest the gains a little bit. It may be down to this trend line. It's right on the 5-day moving average. I think it probably drifts slightly lower, but I'll bet you that it will frustrate the hell out of short sellers who are trying to pick a top in this thing, that it would be more likely to follow the action of a stock like DEC after a run like this, and then everyone calls this day the top. That I think, look at PANL right now versus where DEC was right here. So, those one-day reversals, they get a lot of people excited, because they trade some volume and that sort of thing. I don't think it's going to likely be the end of the trend in here. It might indicate, though, that it needs more sideways digestion through time. What do I think about AA? That'll be the last one. Oh, wow. Kiwi Trader. Very sensitive, man. I said... Let's take a look at that. So it says, douchebag alert. Don't send this guy... Here, let's take a look at it. Don't send this guy a chart with more than a trend line. He'll publicly flog you. Now I'm putting your name out there because you're being a jerk about it. What I said was, keep your charts simple, that this looks like a spider web. I can't make sense of it. So anyways, thanks for the feedback, Kiwi Trader. That's very intelligent, adds very good to the discussion and to StockTwit. So thank you for your time. Alcoa, nice uptrend here on the daily time frame, just broke some resistance. And the weekly time frame still looking like it's got quite a bit of room to run. You look at that weekly chart here, on Alcoa, and this thing's got some room to run. So if you're involved in Alcoa, I would say at this point it looks like the rising 10-day moving average down near about 1730 would probably be the place, the most relevant higher low right now, and that you would want to set your stop below that. So thanks for tuning in, everybody. Hope that you're having a good day trading. Obviously someone's not, but that's their issue. Thanks for your time, and I'll talk to you again on Friday.